Alright, welcome everyone. Today I'll be introducing you to what I call the ClearPoint Trading Strategy. I've been trading for several years now, and I've tried several different trading styles over the years, and I've had varying degrees of success, but the one thing in common with most trading strategies I've found is that they're just too complicated. So what I set out to do is develop my own strategy, and the most important thing I wanted it to be was to be simple, both so it's easy to use and it cuts down on the number of trades that you get with some of the other strategies. So the platform I'm using is NinjaTrader. Main reason for that, it's very easy to use, has good programming capabilities, it's easy to make your own indicators and strategies, and well, I guess the other important thing is it's free. If you'd like to download it, just go to ninjatrader.com and you can get the latest version right there. The only time they actually charge you for it is if you decide to use it for live trading. But for me, all I use it for is charting, and I do all my trading through my broker directly. So my trading style uses the daily time frame. I have day traded in the past, but I do have a full-time job, and I just don't have the time to sit there and pay enough attention to it that I could day trade all day long. So typically my trades last anywhere from a couple days up to, well, I guess the longest is usually around a couple months, sometimes a bit longer, depending on the trade. But that suits my time just fine. You know, I come home after work and I identify which trades are setting up for the next day. I actually place my orders in the evening so that they execute for the open the next day. So my ClearPoint trading strategy is actually a trend following strategy. There's lots of trend following strategies out there. I guess I should explain first exactly what a trend is, in case some of you aren't quite sure. Trend is basically a series of higher highs and higher lows. So on the screen right now we're looking at a daily chart of the S&P 500, and as you can see back here in July and August, we had a series of low. There's a low right there, a higher low, higher high, higher low, higher high. So this is actually what we identify as an uptrend right here. If we look back a bit, back to the financial crash there, back in late last year, this is what we consider to be quite a severe downtrend. A downtrend is actually lower highs and lower lows. So here we start with a high here, low here, a lower high, lower low. So that's what we consider to be a downtrend. So a trend following strategy attempts to get in one of these trends near the beginning and basically hang on for the ride as long as possible. So for the case of this uptrend starting here sort of in mid-July, ideally we'd like to get in right here at the bottom, and we'd like to, well, depending on your strategy, stay in there as long as possible. So really, I mean, you could still be in this uptrend all the way till today. Right now we're looking at about mid-November. It's been a pretty steady uptrend all the way along. But what I found with other trend following strategies is that they get affected by noise in the market. Even in a strong uptrend, there's always small corrections, such as right here. And some trend following strategies will actually tell you to exit the trade right there, which is fine, just as long as you can get back in a reasonable short amount of time if the uptrend continues. But what happens typically is you end up buying and selling way too often, and you end up missing a big part of the trend. So what I attempted to do when developing the ClearPoint strategy is to develop a system where it would identify the trends in a reasonable amount of time, you know, close to the beginning of the trend, but they wouldn't be affected by noise so much. So down here at the bottom of the screen, this is actually the ClearPoint indicator that I've developed. I wrote it for NinjaTrader, and the way it works, I mean, there's a bit of complexity to it, but for starting purposes, all you really need to pay attention to are these dots. So there's basically three colors dots. There's a blue dot, red dots, and yellow dots. Blue dot indicates an uptrend, red dots indicate a downtrend, and yellow dots indicate, well, it basically identifies there could be a trend starting, but it isn't really sure, so it's not giving you a strong indication. There's also a set of bars that plot along with it, and that basically just indicates the strength of the trend. So, for example, here we're in a very strong uptrend, and you can see that by the price action. We're increasing day after day with very little correction. But if you look back here, it says we're in a downtrend, but it's not that strong. And it does end up getting a bit stronger, but overall it doesn't last very long, and it turns back into an uptrend. So the basic way to use this strategy, it's very simple, like I said. This is a strategy that you can use so you can be constantly in the market. You know, when an uptrend is identified by a blue dot, you can buy right at that point. And then when you receive red dots, you can sell. And that's really the basic heart of the strategy. It's basically you're in long on a blue dot, and you sell on the red dots. And as you can see, it does a fairly good job at getting some pretty good returns. For example, say we were trading S&P 500. If you got in back here around July 15th, you would have got in, we'll say you got in at the open, you'd be in at about 9.11. And if you wanted to sell right here, you would have gotten out around 9.94. So that's a pretty good gain. Now this didn't actually end up being a strong downtrend, it was just a minor correction, so you could have got back in the next day, 9.96, and you would have been out at about, well, anywhere between 10.30 and 10.50, depending on when you actually executed the trade. You would have been back in again at about 10.26, and out again. Well, this wasn't that great of a gain. It was probably, 30-point gain or so. You would have been out around 10.60, between 10.45 and 10.60. And here it was indicating that the market wasn't very strong, so it was saying to stay out if you want to go long. But then you would have got back in just last week around 10.47, and you'd still be in there today, and right now it's up to about 10.87. Now this works on the short side as well. If we go back to last year, back middle of 2008, the market was doing fine for the first part of 2008, but then June came around and we started seeing red dots. So this would have actually kept you out of, well, kept you from being long anyway during the market crash last year. You would have been maybe long up until this point. Then if you decided to go short, you would have gone short on June 6th. You would have sold at about, anywhere 1350 to 1400. And you would have held on probably at first until about this point here, about 1260 for around a 200-point gain. If you were still bearish on the market, you probably would have got in. Well, you probably would have, if you're following it religiously, you would have sold again right here at about 1300, and you might have gotten in a couple times, but then you would have got out, sold short again, 1275, and you would have been in there a very long time, all the way down to about 900 for another 300 or 400 point gain. So as you can see, it works well in both bullish and bear markets. There's actually more to the strategy than what I've shown you right now, but I just sort of wanted to give you an introduction to how the indicator works. In the next video, I'll be going over the strategy in more detail.